Welcome back, guys. It's your boy Mbumi and Co with Funds and Galore, where investing means more. So, guys, welcome back to another weekly market breakdown. Also, have posted preparations yesterday. I was busy, man, busy. But I'll go through let's first go through the news for this week, then we'll dive straight into the markets. Right, we need to be able to see on which specific days we can expect extreme volatility, like for Nasdaq, for FOMC, or for whenever Powell is speaking. Right, so for this week I already did my due diligence. So on Thursday we're having the Fed Chair Powell speak. So right, on Thursday we might expect extreme volatility around 20 past 3 South African time. So that's when the news will hit, just after New York session has just opened. Right, so on Thursday we should be live streaming. We're gonna be live streaming on Thursday, that's definite. Right, so let me know if you want me to also live stream tomorrow, but we can also do that, or we can just live stream on Thursday. Right, so now let's dive into the market and see what technicals are telling us. Right, so first we're gonna start off with GBPUSD. Right, so this setup, like I stated, guys, we would have been in deep profits. Why? Like I stated on my latest live stream, or my market breakdown, that we're looking for entries above or below. Right, so like I stated, the market moved impulsively towards the upside on the daily time frame. Right, then it corrected. Instead of correcting to the upside, it corrected to the downside. So I stated to you guys that we might also expect impulses to the upside also. Right, even though we've hit our daily resistance key level, which is highlighted in red, or our daily trend resistance, that's also highlighted in red. Right, and I also state that we want to see what the market is going to do. So the first outcome was the market pushing respecting impulse correction laws. Right, or the second move was that the market, let's dive onto a smaller time frame, 4 hours, is that the market will fail to break above this resistance here, creating an M. An M would have been our confirmation that the market was going to the downside. Why? Because we're on a resistance. M is a reversal pattern that always happens on the resistance. Right, so if the M would have played out and the market respecting this resistance over here, which is now a new support, right, the market would have pushed back down. And once the market has broken the neckline of the M, we would have just waited for retest on the zone, on the previous high over here, the previous resistance. Right, then only we would expect sales going to the downside. But this outcome did not play out. The first outcome played out and we would have been in deep profits. Also, we would have had a stop loss in profit, like I highlighted. We would have had a stop loss in profit, and we would have just been riding out this trade. So we would have caught those impulses when I be entering on extreme impulses. Right, impulse trades, that's where the market will just drive us. So we might be holding for a couple of days or so. So now let's look at the Euro USD. Then afterwards we're gonna be diving straight into indices, my favorite. Right, so with Euro USD, what can we see? Let's go to the daily time frame. Right, we can see that the market is respecting the laws of support and resistance. So at the support key level and at the support trend, right, the market respected the law, and at the support we buy, and at the resistance we sell. So the market created a resistance pushing back towards the downside. Right, so like I stated, an M is a reversal pattern that always happens at the resistance. So we're looking for sales when we want to capitalize on M patterns. Right, then we also have W patterns, which always happens on the resistance. Right, once a W occurs on the resistance, it means that we are looking for price to change direction. We are looking for buying opportunities. A W is a reversal pattern for buying opportunities, right? So as you can see, we had our W occurring where on the support, right? So then the market played out, completing our W pattern, right? So that's important to understand, and I also cover this knowledge on our official Funds and Galore website, right? So for now, it's me and Leo pushing out content. Like literally, we pushing out content. You can also go check him out, Leo Flair. He's my partner, and we are running Funds and Galore, right? So you can go check out the website, free knowledge. Also, we also cover knowledge on how the monetary system works. So if you want to understand how the monetary system works, go check out our website at fundsandgalore.com, right? So with GBPUSD, we add a resistance key level, right? So the market might respect this M also. The market might respect this M, and it kind of did. So we're waiting for the market to first break out of here, give us those retests on our zone here, right? On our zone, then we're expecting for pushes towards the downside, right? We're looking to capitalize on that M formation pattern way back to the support, right? Because at the support we might be looking to buy because it's a support unless the market breaks that support. So when we go, let's just go back to the 4 hours and zoom out, right? We can see that we had a nice 4 hour trend. The market bought at the support and it sold at the resistance. So we can also expect price pushes towards the downside, right? But if the market does not play out that way, we also need to anticipate, because look at, when we switch back to the daily, we can see that the market needs to complete this trend before we can look for selling opportunities, right? So that's also a possibility for the market to take. So if it does take that route, we need to establish where are we going to be placing our buying opportunities, right? So it's basically doing due diligence and listening to what the market is trying to whisper in your ears, right? So we are looking for those sweet spots within the market. So when we switch to the 4 hours, we can see we had market reversing here. So we can list this as a key level. Switch to line. Let's cater for the highest point, right? Okay. Let's also cater for another key level. We're looking for places where the market reverses the most. So as you can see, we had touches here. The market failed to break below, made a fake out, respected, and also pushed to the upside. So this is a very sensitive area in the market, right? So this will be let's look for an exit strategy too. So that will be our exit strategy. Okay, we have an exit strategy and we have an entry strategy for also buy. So if the market neglects the formation of an M, we might be looking for buying opportunities towards the upside. So what else can support the theory that the market can also potentially go to the upside, right? So we had a very strong impulse correction. The market broke out of this impulse, right? We can expect corrections before getting those strong impulse moves to the upside, right? So the best area for us to enter is if the market breaks above, gives us those retests and pushes towards the upside, right? So we're gonna place our potential entry spot here. So this is where I would enter Euro USD. Those are the two areas or levels in which I would enter Euro USD to complete our daily trend. So I would either go in for sells once the market breaks out of the zone over here. Let's zoom in again, and let's also keep the charts clean, right? So let's keep the charts clean. So the market broke out of this trend. So also we can expect pushes. We will look for entries at the break of the support, because this is our support floor and this is our resistance flow. We buy at the support and we sell at the resistance. Market bought at the support, sold at the resistance, created a fake out, another fake out, and it bought back towards the resistance. So we might be looking for entries at that area once the market breaks this area too, right? If it breaks it, we have the resistance creating also what we call a double top, right? A double top formation, which is also a reversal pattern, a reversal structure, which I'll also cover in the Funds and Galore website, right? So make sure to check that out. We're done with Euro USD. We found where our entry area is. Now let's switch to my favorite. Let's start off with S&P 500, right? Let's look at S&P 500. So S&P 500, if we had an exit area, this would have been a really nice area to purchase, to literally place in our buying trends, and I will explain that in a few. Let me just cater for a nice beautiful zone right here. We have more information to place in a zone, right? So let's start off on the daily time frame and work ourselves to the 1 hour to 30-minute time frame, right? So we had a nice bullish trend. And guys, if you want more content like this, make sure to like, subscribe, so that you get notified whenever I drop content, because there's gonna be a lot more content dropping. So yeah, you can do that if you enjoy this content, and if you want to also follow the market with our Funds and Galore community, right? So we had our support here. Market board, hit our resistance, came back and it hit our resistance floor again and failed to break, came back to the support. We had a hit under our support, so we're expecting for the market to push back until it completes this whole trend, right? But now that's literally the market structure. Right now we want to look for entries. There's a difference between the market structure and entries, right? So now we need to dive into the 4-hour trend. As you can see at our nice beautiful 4-hour trend, so the market is also in respecting the laws of impulse correction, and an impulse, in a very strong impulse right now. So if we had an exit strategy, we would have been in these trades, right? But the problem right now is that we don't know where to exit, because the market has never been above here before. So we wouldn't know when to exit, when will be the best time to exit. So we need to allow the market to develop before looking for entries for S&P 500 at this particular point in time, because we need data from the past in order for us to make calculated decisions as technical traders, right? So right now we're going to be diving into Nasdaq100 and seeing what Nasdaq100 is doing for us. So when we dive in Nasdaq100, so wait, before, let me just tell you something on S&P. How would I go about trading this also, right? So like I said, you're not going to be trading this new highs. In order for us to get good quality trades at this point in time, right, we would need the market to crash. We would literally need the market to crash, right? So let's make this new trend right here quickly and show you where I would potentially enter if the market was to respect the conditions that I will just show you guys right now, right? If the market respects those conditions, I'll show you how to capitalize from those specific conditions, right? So we had a nice beautiful trend, right? So the market first needs to do the market needs to take in a very steep push towards the downside. Once we can get the market to push towards this area right here, we will be looking for buying opportunities towards the upside, because this is our support and this is our resistance, which is now a support because the market has broken or has managed to break above, right? In order for this to become a support again, the market needs to tank again. Then that's where we'll be looking for our buying opportunities, right? For at this particular point in time. So if the market still continues to go up, we will just continue to adjust everything, and I'll show you how to adjust, because you always need to be updated. Your strategy needs to always be updated, right? And that's how it works long term. So that's S&P 500. Now let's go back to Nasdaq 100, right, and explain what's going on. Daily time frame. So at the daily, we had the support market respecting the law of support, resistance we sell, support we buy, resistance we sell. Now we're looking for the market to complete that overall trend, just like with S&P 500, right? So right now we had our 4-hour trend whereby the pushing towards the downside, whereby the market came back to our support zone and our support trend, giving us those double confirmation that the market might reverse at this area, which it did, created an impulse, a very steep correction, and now we're at an impulse, right? So what happens after every impulse? We expect a correction, so we might be able to use that correction in our favor to capitalize on those pushes towards the upside, right? So let's make the charts clean. We had our first trend, the market broke out of this trend, creating a whole bigger trend, right? More volatility. It takes a lot of volatility to create big trends. So the market had a lot of volatility while creating this trend, right? So let me just remove everything. So with Nasdaq, we have two potential buying entries, right? So the market can, in order for us to capitalize on buying opportunities at this particular point in time, we need the market to play out in two scenarios. The first scenario is because we're at an impulse, we expect the market to do a correction, also respecting this resistance over here, because we're at market respecting, failing to break above, pushing towards the downside, came back up here, and it also failed for the second time, and it might also fail for the third time, creating a triple bottom, right? But also the market might also fail to create a triple bottom, so it might respect the law of impulse correction. So once the market pushes back, this is also a support. That's why it can also support impulse correction law, right? So we have a resistance, so we can expect market to push back from here at this support and make its way up impulsively. And like I said, we want to capitalize on very strong impulse moves, right? So that's the first scenario, and we always target a whole 2% move, and we risk lower than a 2%, and we risk lower. 0.65 is right about fine. Anything lower than a 1%, it's good, right? So it'll depend on how your risk appetite is and so forth. So once we can get the market to push back down, we can capitalize at that level here. That's why I have an alert. As you can see, Nasdaq crossing 19,000 point, 644.7, right? That level right there. Or if the market respects this triple bottom to the extent, we can expect the market to push even further down, right? Pushing back here. So this is the area where we also be looking for buying opportunities, right? Because we're having a support area here, right? So the market bought at the support of the trend, came to the resistance, bought at the support. So if the market pushes back down here, we would have had our support, and we'll be looking for buying opportunities towards the upside, right? Also, we have a zone right here, which is also acting as another confirmation that we should be looking for buys at this area, right? So if the market does not respect the first setup and it pushes down, we can also capitalize at that area right there, because the market is respecting price, right? So we can anticipate high probability setups right here and risking lower than 1%, according to your own specific risk appetite, right? So these are the two areas where we can look for Nasdaq entries, right? So that's why we have another alert place right there. And last but not least, let's check out gold. Gold is pretty straightforward. Let's go to the daily. We are like playing on new highs, just like S&P 500. We had our daily trend whereby the market broke out of it. It did not respect the resistance law, whereby it broke out, meaning that the market might be continuing on the bullish streak, right? So that's what it can suggest. Right now we need entries. Right? Since we did our due diligence on the daily, we understand that we are all-time buyers, right? But we understand that the seasons or the periods whereby it could be weekly, daily, whereby the market can go against the overall direction. So when we zoom back in, let's just do this. Wait. Okay, wait. Let me bring that back. So we can look for entries once the market pushes back down, respecting this resistance for our trend, right? And also supporting this resistance trend, this new resistance trend, whereby we buy at the support, sell at the resistance, buy at the support. So we're having an area where we're having a form of two double confirmation only based on trends. We don't have any supporting factor, or what I meant to say is, like, we don't have a key level or a zone structure that can also support this potential play in the market, right? So what this means is that if the market does respect, let's remove everything. If the market does respect the two trends, we can capitalize on this area right here. When the market pushes back, we can also capitalize on this area right here, because this is also a support, which is also supported by a zone right here, double support. Or if the market breaks out, we can look for entries back at this big 4-hour trend right here. We can look for our entries at the support trend and at the support zone, push into the upside, thus giving our trades high probability value, right? We want trades that has a high probability value, right, until back here, whereby if it does break, this will be our new resistance, right? So those are the two areas I'm looking to enter for gold, right? So it's your boy, man. It's your boy, Mpumi and Co. Right, it's your boy Mpumi and Co. Until next time, guys. Thursday, like I said, live streaming. I'll see you guys there.